The Federal Reserve meeting minutes are being released later today, and that is likely to be a fairly big market mover in multiple markets and could provide some clarity about the situation over in the US. Now, I'll explain why in just a moment, but first, let me just give you a quick update about this channel. So we'll be going back to talking more about the daily market moving news and sharing charts. We had to sort of figure out the process for getting videos out quicker so that they're closer to the news releases for you. And I feel like the team and I, we've done that now. So you may see some changes in the way things look over the next couple of weeks. Things may end up looking a bit more basic than previous videos, like what you can see now. But it means there'll be plenty more videos each day about the market moving news, fundamentals, and some technicals as well. So subscribe to the channel and hit the like button to support the channel if that all sounds good to you. And let's get back on topic. So the last Federal Reserve meeting back in mid-June came as a bit of a surprise as the Fed took a bit more of a hawkish pivot, meaning that they were starting to lean towards tightening monetary policy sooner rather than later. At least that's what the projections were showing anyway. So due to strong growth and higher inflation, the Fed's projections showed 2 potential rate hikes in 2023, which was a change to the March forecasts, which showed that, near zero rates would last until 2024. Now, the Federal Reserve Chair, Jerome Powell, did try to downplay it afterwards and suggest that their focus is more on uncertainty about the economic recovery and achieving full employment, which is still a long way off. But that means that basically the Fed is pulling in 2 different directions. In one direction, they're increasing their forecasts, but in the other, you have people like Powell now downplaying it. So later today, we have the minutes from that meeting, which should indicate which side of the tug of war the market will be leaning towards and where we should be leaning towards with our trades. So a lot of focus is on whether they're going to provide some kind of hint about the possible timeline there could be of when tapering may take place. According to Kaplan, the economy is close to ready for tapering to begin, since most of the problems left in the economy now are more supply side, which bond purchases are not very well suited to fixing. So this includes employers struggling to find workers, logistical problems of getting products to market, which may boost tapering sentiment among the Fed officials. And in fact, the latest NFP, non-farm payroll reading from Friday, also gave some positive sentiment towards tapering happening sooner. However, unemployment does still remain well above pre-pandemic levels, so that is something to keep in mind. So at this point, the question isn't whether tapering is going to take place, but when it's going to take place. So in terms of markets that are going to be affected and that may be affected when the meeting minutes are released later, unless there's no impact, well, obviously bonds and stocks should see some sort of reaction, but the market that we and our members are focused on at the moment is US dollar, Japanese yen, which you can see on screen here, since that's a market that from a technical point of view is at a critical point right now. And let me talk you through it. So what you can see on screen here is the weekly chart. And essentially, for a long time, we had this bearish structure. We were in this downtrend until the pandemic hit around here. We had the big volatility, the big sort of move down before things started to stabilize a bit and we started to see off this bearish structure. We've now come to the point where we've tested that lower high, which means that this is now a point where the context is being challenged. In the meantime, we've had a bit of bullish structure with the higher low here, which also confirmed this Fibonacci range. And so we're at this point where we don't know if the short-term bullish structure is going to take over and lead to there being weakness in the long-term structure, or if we'll fail here and this will see the market heading down. I didn't mean to draw a smiley face there, but let's finish it off anyway. Heading down. So I think basically the release of the meeting minutes is going to determine that for us. I'm not going to show you now, but you'll see on the daily chart, we've had some really nice bullish structure. I think a push above this level here, I've marked out the region, this purple zone here, which is around the previous lower high. A move through that should see us be able to accelerate much easier to the 127.2 of the short-term move. And if we're going to fail there, obviously the next sort of strong path of resistance, at least on this weekly chart, which is the sort of longer term, is this low down here. But you'll be able to see quite clearly from the daily. I'm just going to switch very quickly. We're not talking through it for now. You'll be able to do your own analysis. You can see we've had this strong structure. We broke out temporarily and we're back inside. In terms of what we're testing with the structure, we haven't broken through that higher low yet. So I think this evening we'll be able to see with that. So make sure you keep an eye on that release, 7 p.m. UK time. I believe it's 2 p.m. Eastern. If you have any trades open, maybe reassess and see whether it is worth closing out temporarily, just in case. You know, it might have no impact, but we always want to be on the safe side. If you want to know more about how I trade, check out the free trading that's linked in the description. Please do hit the like button to support the channel and subscribe so you don't miss a thing. Remember, as I said, we've got lots more coming. So let me know your thoughts in the comment section as well, and I'll see you in the next video. Take care, guys.